Interesting topic. And today we are going to speak about intangible assets, and it is represented by IAS 38 as far as India is concerned. And in IFRS also it is by IAS 38. So it's a very interesting topic because intangible asset is gaining a lot of prominence as far as today's environment is concerned. You talk about Zomato, you talk about Flipkart, you talk about Amazon, you talk about Swiggy. All of them, I mean, what are they monetizing? All of them are monetizing the reach. All of them are monetizing the app. All of them are monetizing basically the reach in terms of customers what they have. All these are intangible assets. Now if someone asks me that Sai, why can't Reliance, why can't Tata, why can't basically Swiggy, why can't Zomato have a multi-billion rupee capitalization in their balance sheet of their internal brand? Because if I talk about Swiggy is a brand today, right? Now someone can definitely challenge me that, Sai, why can't I capitalize this brand in my balance sheet? At what value is what I will argue? And then he will say, I will create a valuation and I'll recognize the brand in my books. Is that allowed? First of all, you need to basically understand that theoretically, from a literature perspective, internally generated intangibles are not allowed to be capitalized, right? Now, practically also, if I allow companies to start capitalizing their own brand, okay, no one can control that particular situation because everyone will end up capitalizing some of the other intangibles in their own books. So intangibles, internally generated intangibles, are not allowed to be capitalized in the standalone books. However, when these companies get acquired by another companies, the acquirer definitely has to allocate a substantial portion of the consideration, substantial portion of the valuation to intangibles, and we have to basically get a valuation done. And in the morning, we just had a call with one of the clients for doing a purchase price allocation. So when the acquirer does the purchase price allocation, right, he allocates certain portion of the valuation, certain portion of the consideration as intangible assets, and intangible assets are basically amortized, and the residual portion is allocated to goodwill, and goodwill is tested for impairment. Quite interesting, right? Intangibles has got its own accounting treatment. Intangible has got its own what do you say, way in which people look at it. Intangibles is more important from a transfer pricing perspective also. A lot of companies predominantly focus on intangibles from a royalty model perspective also. For example, if I talk about platform, if I talk about app, if I talk about specific companies like Google, they have their IPs registered in a particular jurisdiction, and the India entity has to pay royalty for the usage of their app, usage of their brand. Now, that is something which is important from a tax perspective as well. Now, the definition of an intangible asset is basically very important, and it has got predominantly three main characteristics. It is controlled by the entity, it has no physical substance, and it is identifiable, right? Now, let's take software license as an example. Now, you basically purchase the number of computers for your employees. Now, when the computers arrived, of course, you will basically capitalize all the computers one by one, and you basically made an online purchase of corresponding number of licenses for the operating Windows systems to run the computers. Now, definitely, someone has to argue with me, when you purchase a computer, computers will have to be capitalized separately as a fixed asset. Now, when you purchase the licenses, whether that will be capitalized as intangible assets or not? Definitely yes, because that is basically a part of operating system. Windows software, what you purchase, it can be capitalized separately. The Microsoft licenses, what you basically purchase separately, that can also be capitalized. And specific software, what you purchase separately, can also be capitalized. But there is a concept of annual upgrades, what you get in the form of Microsoft licenses, you pay license fees. Now, whether that can be capitalized, the answer is no, because that is typically license fees, right? So we call it as right to access and right to use. From a seller perspective, right to use is basically recognized immediately, right to access is basically recognized over a period of time. Similarly, from a purchaser perspective, right to use has to be capitalized immediately, right to access has to be amortized as license fees. Easy to understand? Now, if you are someone who really wants to understand this basic practical aspects of IFRS and how what does it impact the business, okay, what is the business impact of IFRS index on the valuation, profits, and financial ratios on the tech industry, I am going to take a 2-hour breakthrough webinar tomorrow at 3 p.m. okay, to address these challenges. Apart from this, for the very first time, I'm going to orient all of you on how technology can enable a finance function in the organization. Yes, technology can make our life easier only if used the right way, and how to deal with ambiguities with respect to accounting treatment in your company. I'll also be sharing certain Big Four approved accounting memos which you can get it cleared proactively rather than being reactive.